It's a big, noisy universe of stocks out there. Welcome to Goodbye or Goodbye. Our goal to help cut through that noise to navigate the best moves for your portfolio. And today we're taking a look at European airline stocks as consumers continue to spend on travel. Which stock is worth keeping grounded and which can take your portfolio to new heights? I'm here with Abhay Deshpande, Centerstone Investors Founder and Chief Investment Officer. Thanks so much for being here.
Great to be here, thanks.
So let's start with the big Irish airline Ryanair, which also trades here in the U.S. It's done pretty well over the last year, in particular over the last several months. But let's talk about your case here for why it's going to be a winner. It's a low-cost airline, first of all.
It's a low-cost airline, and so in a commodity business like airlines, like any commodity business, it's all about cost. It's about cost being the lowest in the industry, and that tends to be the winner. And that you apply that to pretty much any commodity industry. That is the entire basis of their operating model, down to the fact that they only operate the 737 airplane. So they don't have, like most other airliners, a suite of airframes. They have one airframe. With that focus on cost, what they've been able to do is provide the lowest price to the consumer. It's also allowed them to narrow down in an industry where many things are out of your control. They've narrowed it down to a couple: fuel and demand. So demand can go up and down, as you know, with a recession, but having the low-cost operator down there, when demand falls, they tend to be able to actually gain market share because they can price at a level much lower than anybody else. Right. What demand is there, they gain that market share.
All of this means that they also have a strong balance sheet because of some of the operating levers that you talked about, including keeping their fleet pretty narrowly focused.
Yeah, I mean, that's if you're, I'm not pitching all airlines. That's a terrible industry. If you're, from my perspective, if you're going to invest in airlines, it's best to treat it like a commodity business, which means pick the lowest price player. Also focus on balance sheets because you do have, during COVID, demand went to essentially zero. You need to be able to withstand kind of extreme environments that also happened post-COVID or post-global financial crisis. So balance sheet is the second most important thing. Cost structure, number one. Number two is balance sheet. Number three is management, which we may get to. But
yes,
the balance sheet is extremely important. Here, where they've excelled is they have not gone into fancy financial engineering in order to build the business. It's organic growth. They generate cash flow. They buy an airplane. They generate cash flow from that airplane. They buy another airplane.
So it's only airplanes that they can afford effectively.
Yeah, it's organic growth. So They're not borrowing a lot of money. They're not going to lease into the lease model. They own most, if not, the vast majority of the airplanes. They may lease 5% or something like that. But that's a very different financial model than most other airlines, including, by the way, Lufthansa is also an owner, not so much a lessor.
All right, but don't jump us. We're going to get to that in a minute. So let's talk about the high quality management team as well, which you alluded to.
Probably the most important thing a management team can do outside of managing the business is manage the capital of the business.
Now, we also like to point out potential risks, even for a good buy, right? And in this case, you've kind of alluded to it a couple times, which is that airlines are not usually a great business, right? They tend to, expand capacity by too much, for example, or, they buy too many planes, whatever it may be. So I guess there's always a risk that Ryanair could do something similar.
Yeah, they could easily expand beyond their capability to maintain the financial model together, right? They could, I think, since they've got most of it under control, like a lot of the what could go wrong sort of scenarios tend to be things that they cannot control. You mentioned the economy, for instance, regulation. What is happening in Europe next year? We don't even know what's happening next month, So the kind of, and they've grown substantially by adding services to the periphery of Europe, Central and Eastern Europe. And if that becomes a war zone, I don't know, in the next couple of years, who knows? I'm not predicting that. But those types of things obviously have a much more of an impact on Ryanair. They're not a global player. They're really a regional player. So what happens in the region is extremely important. So they're exposed to that region, yes. Most certainly. And you do own shares of Ryanair in your portfolio, we do, yeah.
Is that correct? Okay. Yeah. Let's get then quickly to your goodbye, the one you don't like. You hinted at it. It's Lufthansa, the German airline. Those shares have gone down over the past year. So let's get to it here. First of all, here too, susceptibility to the economic cycle. But this is not a low-cost airline.
So this is not a low-cost airline, although they have a low-cost segment. And this is, and I picked these two companies on purpose. They're the only two companies I would buy because they're the only two of note, other than some Asian airlines, that actually own the fleet. Lufthansa does as well. There are a few differences. Lufthansa originally was built as a long-haul carrier, meaning longer, international routes, and they had some economic and sort of scale advantages built with that model. Time has gone by, obviously, and more of the air traffic is intra-Europe. And so that's where the low-cost model has really taken a shine. I mean, you're like you mentioned earlier. I mean, some of these tickets are like $25 or 25 euros one way, right?
And meantime, they're losing market share to the likes of Ryanair.
They're losing market share to the likes of Ryanair, and the likes of Ryanair is Ryanair and Wizz Air are the main sort of low-cost competitors. They're losing some market share there, and the valuations of the two businesses kind of also make me want to favor one or the other, right? This one is trading for, call it 6 times operating profit. Ryanair is about 8 times operating profit, but there should be a much wider gap. And Ryanair is trading at airline multiples, but it's a more or less a franchise. Another
contrast with Ryanair, the balance sheet here. It's got a more leveraged balance sheet and therefore has exposure to higher interest rates.
Yeah, mid-single billion. Net debt. Now they've gotten into trouble. They've had to encumber a lot of their fleet that they owned to secure some financing during COVID. They're exiting that. They've spun off some subsidiaries like a catering business. So they're finding ways to generate some cash or to free up the balance sheet. It's not like a clear and present danger. They do have assets that offset the debt. Yeah, that's on the balance sheet. So that's it's not something that's going to impair the business or threaten their survival.
Right.
But as an equity owner in a total enterprise value situation, I'm more concerned about how much value is being detracted by the debt.
Right.
Right. Now we're talking about businesses that with a large amount of debt. Yeah,
it's not
as much left over for equity.
Yeah, and then we also like to talk about what could go right here. And this is a company that is at least supported by the German government, and so that could help them out. But would that help the stock appreciate necessarily?
So the number one thing that I think could go right is, and this is not, I don't think, even a revelation, right? But they've now shown. Granted, the gun pointed at their head, but they've shown the ability to create or try to unlock value for shareholders. So a business that is, essentially a government has, it's not government owned, but highly government influenced with a government put basically. There's always a question mark. Who is for whom is this business being run? Shareholders or the government or the local municipality? And in this case, you can see some shareholder-friendly moves that maybe mark the change in mindset.
But maybe too early yet to get in on related to that.
I wouldn't want to bet on that.
Yeah. Okay, well, interesting here because it's especially stocks we don't frequently talk about. So Abhay, thank you so much. You're telling investors, just to sum up here, to buy Ryanair for its low-cost position, strong balance sheet, strong management team. On the other side, you say avoid Lufthansa. It's susceptible to the economic cycle. It's losing market share to companies like Ryanair, and it's exposed to higher interest rates because of its balance sheet. Abhay Deshpande, thank you so much. Appreciate it. And that'll do it for the latest installment of Goodbye or Goodbye. Look out for new episodes 3 times a week at 3:30 p.m. Eastern.